What's going on? Welcome back to the channel. So today we're going to talk to you about SoFi. I want to go over some of the data points, break it down what moved it, and why SoFi really did lag a lot of the other fintechs. So I want to go over all of that, but first make sure to hit that thumbs up. And with that, let's get right to it. SoFi went down 2.96%, 25.71 the low, 27 the high, and 66.2 million shares being traded. 79 is the average. So when it came down to the pre-market, we had initially a lot of fear that was being rolled over from the last several trading days, but we also did have some negative data. So we had initial jobless claims coming out at 5 a.m., actual 232. Consensus 223 and forecast of 254. So even though it was lower than the forecast, it was still too high for Wall Street standards. And then ADP employment, the weekly, did come in at negative 2,500. So wasn't necessarily the best, although it was better than last week's, which was negative 11,000. But nonetheless, market didn't really like that. As a byproduct, we did see a little bit more of a stronger likelihood of a cut for the upcoming December 10th meeting. So now there's a 50.6% likelihood of that occurring. And this is generally what the market wants. It wants negative data, not horrifically bad, but just bad enough, somewhere in the middle. So in general, that happened. And plus, early this morning, we did have Bank of America survey, which kind of found that about 45% of fund managers see potentially a rate hike in 2026 being the biggest risk. So that kind of came out of nowhere. I think that was just put out there just to add a certain level of fear, because Bank of America, I think, is still largely bearish on the broader market. Just when they even, I think it was at, like, S&P was at 4,800 and they said go short, like, that's comical. So they definitely have shat the bed quite a lot, pardon my French. But nonetheless, we did see a nice recovery in the second part of the day. So for those of you that tuned in to my pre-market video on my other YouTube channel, Financial Journey, that's exactly what I said would happen. So I felt that there was going to be a nice recovery in the second half of the trading day. Of course, I couldn't really predict exactly what was going to cause it, but it just, the sentiment, I think just the market has gone down too much in like the last, was it 48, 72 hours of trading days worth. So ultimately, a couple of things did come out. One was this. So we knew that that 2,000 dividend payment was going to be planned for mid 2026, but it looks like they want to move it up. So I think generally the market took that as somewhat as a positive. And then we did see Trump meet with Saudi Arabia. And ultimately, it looks like there is going to be a 1 trillion investment, which is up from the initial 600 billion. And this was announced, I think, way back in April, if I remember correctly. So this is good stuff. Market took this as a pretty strong positive and really moved higher. Tomorrow, though, we do have a lot of big data. So we have the FOMC minutes that's coming out at 2 o'clock. So just be aware that you might have some profit taking leading up to that point. But the market's also going to be really looking at what the members are truly saying, because the last minutes that did come out, there was multiple members really in favor of multiple cuts. So that's going to be a hot one. Then no doubtably Nvidia's earnings, that one's going to be another hot topic, which most likely will move the broader market. And then Thursday morning, we have Walmart's earnings. So over the next couple of trading days, should be a fun old time. Aside from all that fun stuff, though, there wasn't really anything associated to SoFi. So no press releases, no SEC filings, no speculative things being brought up on social media. It was just merely piggybacking off of the broader market. Aside from that, shorts did return 120,000 shares. 9.48% of the free float is being shorted. Works out to be 112.26 million shares overall being shorted. So the fact that shorts returned kind of does signal that today's red day wasn't really justified. So let me know your thoughts on that in the comments below. Looking at the options, we did see 40 million in calls, 22 million in puts. So very low volume in comparison to the norm. So today we had a grand total of 61.7 million. And just to give you a good representation of the last several trading days, we had 71 yesterday, 91 last Friday, 155 the day prior. So definitely today was extremely low. But on a side note, 45% of all the options being done were bullish in nature. From a bull standpoint, you see a consensus for it to be above 2650. to, I'd say, like $28. So that's kind of the range the bulls are feeling is on the table. Bears are anticipating for it to be sub 26 to 27. So there's definitely a lot more upside than down. These are some of the transactions that did occur on the secondary market above $100,000. So 26.4, 16.1, 3.5, those were some of the big ones there. Regrettably, though, if we kind of look here, most of the transactions were bearish and were institutions actually selling. This is why I like to go over where volumes comes from. So even though SoFi did kind of move higher, we had a lot of institutions selling for whatever reason. I think that did also attribute to SoFi lagging a lot of the other fintechs. So you had Upstart having a phenomenal day, you had Robinhood, you had Webull, all really moving higher. SoFi lagged. So for whatever reason, we did have institutions selling SoFi. So maybe just profit taking. Once I go over the technicals, that could also be one attributing factor, but these are some of the transactions that did occur on the dark pool. So big one was 5.5. One just happened about 10 minutes ago, 4.07, 4.07, 2.1. So rather quiet in all fairness. And most likely a lot of this is linked to actual hedge funds because, as I showed you, shorts didn't really do all that much at all today. So you can kind of see from that teal line, they were not active. So generally, it is fair to assume that most of this was linked to hedge funds. With it closing at 26.24, it is trading between this S1 and this S2. So 25.20 is going to be that next strong support. Wasn't tested today. But going into the next couple of trading days, just watch for that one. Same with 22.83, that'll be the following support level. Then 26.66 and 29.03 will be the next strong target / resistance points. Aside from that, though, these are some of the unusual options. So you did have one initial bearish one, so it looks like a $42 call was sold. It was a single leg transaction. It could just be a institution doing a covered call. Mind you, they didn't really get that much in premium, only 12 cents, but it works out to be $12,000. So maybe someone just wanted some lunch money or whatever, I'm not really sure. But the other options that were done were bullish, and so you can kind of pause it, look at the strike price and some of the options. This one right here, $358,000. It was out of the money, single leg, and it looks like a $23 put was sold, and that is for April 17th, 2026. So it looks like that individual or institution does feel that it will not be below $23. So that's kind of a bullish thing. But on the actual chart, it is below that 50-day moving average. So wedge bound between that 50 and 100. So most likely this is exactly why some institutions might have been selling SoFi today, because a lot of other fintechs, they've been hit very, very hard, and most of them are actually below the 100-day moving average. So they already went through their kind of push lower phase. SoFi hasn't. SoFi surprisingly has done very, very well. I know some people kind of getting really irritated with it and want to sell, but surprisingly it's done very well in comparison to a lot of other fintechs. So I think today it's just push lower. But still, over the next couple of trading days, just watch for that 100-day moving average. This is going to be the first time since pretty much April of 2025 when SoFi's actually closed below that 50-day moving average for now 3 consecutive days. So we might see some consolidation over the next couple of trading days, but as I've mentioned, it is all going to come down to FOMC minutes, Nvidia earnings, and Walmart. Unpopular opinion about Walmart, but still, one positive thing though that could really help push it higher, if again all those things go according to plan, is the fact that stochastic RSI is very oversold. So let me know your thoughts on SoFi. Did you buy? Did you sell? Are you doing covered calls to kind of hedge? What are you doing behind the scenes? And then one final thing, pop over to my stacked account. Just launched this roughly around a week and a half ago. I did initially have a promo just for the first 48 hours, but because of Black Friday, I'm extending it. So I only had about 50 members initially. I'm extending it to 100. So if you're looking for some solid buy signals on stocks, options, crypto, I put it at $1. So definitely sign up. Link in the description below and also the comments for that one. So this is going to be only available to the first 100 individuals who do this, and it's only going to be $1 a month for forever. So definitely sign up for that while you can. Black Friday promo. And with all that said, appreciate all of you watching.